Let's get in Vikas Khemani, founder, Carnelian Asset Management and Advisors. Vikas, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit. A happy Independence Day in advance and a happy Janmashtami as well to you. My first question coming to you is categorically the fund that you have, the Amritkaal vision. Pretty much in consonance with where we are right now. We're 21 years away from Vision 2047 as well of Viksit Bharat. If you have to look at a fund at this stage, what is your core belief in terms of the long-term wealth creation? And what are you betting on if you have to look at the next 10 to 15 years?
First of all, thank you very much for having me, and happy Independence Day to all of you and your viewers, and happy Janmashtami too as well. I think, like you rightly said, we launched Bharat Amritkal Fund last year, and our belief has been very, very simple that India is the transformational growth path. What we have seen in last 10 years, a lot of foundational work has been done in terms of economic reforms, digital reforms, infrastructure reforms, and a lot of mindset shifts have happened. And I do believe that, as India moves from a $4 trillion GDP today, thereabouts, to about 29, $30 trillion GDP by the time India turns 100, and, our per capita income goes from $2,500 to $16,000-$17,000. It's a one of the very big transformative journey, and it happens very rarely in the lifetime of a nation. And these kind of periods are very inflection point periods and create huge amount of wealth. So we are big believer in that, and I think in this we are one of the only, I would say, or only large economy or game in the town. If you see, our biggest strength is that we are the youngest nation in the world. We are the most populous nation in the world, and we are the most aspirational nation in the world. So this kind of combination you will not find in any part of the world. And fortunately, our aspirations have been triggered. Our mindsets have changed. And these mindsets, new mindsets, I think will propel us into sort of next trajectory. And I'm happy to go through what mindset change we have seen through, but this will create a very widespread wealth across various sectors, various opportunity sets, which India has never seen before. And it will be deepest part of the country. It is not restricted to the metros. It is, spread out in towns and, smaller towns and smaller cities. It is spread out across various sectors. It is in the investment phase, it is in the manufacturing phase, it is in services phase, it is in technology. So it's so well-rounded, growth which we are witnessing and which we'll witness in time to come, that, you will not be able to compare anything in the past of our history, but some parallels you can draw what has happened elsewhere in the world.
So Vikas, let's break this up. With everything said and done, with the growth, with what you are seeing where we could go, which are the sectors that you're betting big on? Because, between mid caps, small caps and large caps, your divide is pretty much in line, in that 25 to 30, 35% kind of exposure from the overall fund. What sectors would you bet on?
I think this fund bets on broadly five broad buckets, as we call it. Manufacturing, banking and financial services, consumption-oriented plays, services-oriented plays, and infrastructure. And this broad five buckets, each of them have many sub-segments, and also you basically identify companies, which are benefiting in each of these buckets from a big transformative journey we are seeing. And when you're talking about 20-25 years journey, please understand that, there will be always intermittent cycles. There will be some segments will do well for a period of time, will not do well for a period of time, but structurally they will do well. So, within these things, you have to keep rotating as and when, depending on your view on the sector and sub-segments plays out. But broadly, these five buckets are going to create massive amount of wealth.
Right. Vikas, hi, Varsha this side, pleasure to have you at NDTV Profit. I just wanted to have your view on some of the sectors like, cement or defense. What do you think India will be at these themes in the next, 4 to 5 years?
Again, cement looks good for the simple reason we have not had, much price hike for some time. Capacity additions have been limited, demand has been growing. So cement tends to move in a step function that, you have period where capacity gets added, then consolidation happens. So I think next 2, 3 years, 4 years look pretty good for cement. Defense is a structural play. For next 5, 10, 15 years. The only challenge in defense is that because there's one customer and the valuations are disproportionately high, and the timelines are uncertain. Hence, the risk portion is high. So you have to find right risk reward opportunity rather than just looking blanketly at the defense as a field. Like I said, in last 5 years, we never betted on consumption because consumer companies might do well, but I might not make money as an investor. So as an investor, you have to make money, and hence identifying right company is important. But defense, structurally speaking, is a good opportunity.
Okay. So structurally, defense is a good opportunity. So Vikas, if you have to look at the formation of your fund right now in terms of the stocks that are there, what are the names that you've added in the recent past where you have exposure to? Because one name that comes to my mind right now is Edelweiss as well. What's the story in terms of Edelweiss and any of the other capital market companies? Do you think this is a space you should be watching out for, and why?
You will do a very disservice to the whole conversation of when talking about Amritkal period and talk about a stock in the company, right, in a portfolio. So I would probably talk and keep the conversation more at a macro level and the thematic level rather than the stock.
Sure. So how are you looking at the capital market space then?
Generally, if the economy goes from $4 trillion to 29, $30 trillion, obviously capital markets are going to become bigger and better from here. And as an intermediate place of any capital markets, and there will be many players in that, wealth management to asset management to brokers. So, and all of them will do well. There could be intermittent cycle, but if you take 20-year view, all of them will do well. They will be far bigger than what they are today.
Other aspect is, I'm sure the fund is kind of focused on India's growth story. Do you think you would look at export-oriented sectors where right now there are threats when you look at US tariffs? I mean, there is a lot of uncertainty on that extent. So do you think the investment mantra right now should be domestic-oriented sectors versus export-oriented sectors? Or do you think the risk is not that large enough to have export-oriented companies in a fund which is meant to be a Amritkaal Fund?
Again, this is a very, export-oriented companies can necessarily doesn't have to be in US only. We have only $80 billion exports to US, and rest is all rest of the world. So point is that, and that is all fine. So, the way we look at it, we understand, try to company business model and see what expert percentage of the business is at risk right now. And if it is a larger percentage, then one should be careful. Though I think things have not settled yet, finalized yet, there could be right now more rhetoric than the reality. But we will know only in the fullness of time that what outcome comes on that. So, but at the same time, I do believe that this is not a derailment of the risk or derailment of the story for India. This is a temporary blip, and I'm sure 6 months down the line we will talk about it very differently.
Vikas, now since it is Independence Day, will your fund, give financial independence to one who is at 25 or 30 years of age investing in this fund?
Absolutely. I think, see, India, in my opinion, will compound anywhere between 15-16%, over next, in my opinion, 15-20 years. And for sure, I mean, probably in a slightly more rate in next 10 years. So, in this period, if anybody is remaining invested, will definitely compound and gain financial independence. While you're working, your savings should go into equities in Indian equities. And mind you, like last 20 years also, India has delivered very good returns despite all kind of weaknesses and fault lines. So I see no reason why India will not deliver when we have so many fault lines getting corrected, so many reforms happening, so many positivity working for India. So I think India will be one of the best market in the world from a wealth creation perspective.
Vikas, I mean, we've seen different styles of investing, from different generations. If you have to give one advice right now to the latest generation, I think, which is the Gen Alpha, what is that advice that you would give them if they have to compound their wealth and look at financial freedom from a next 20-25 year perspective? What is that one quick advice you would give them?
I would say, I mean, all of you are very, very smart. Uh, the only thing I would say, I'm sure given your youth, you are also in a hurry. You can only choose between jaldi or jada. You can't make both. So hence, don't be in a hurry. Try to make more, and that more or happens only when you compound over a long period of time. People who try to make money in a hurry tend to actually create negative impact on the portfolio. And hence, so just don't be in a hurry and try to think very long term and compound value in long term.
Absolutely. Long term is going to be the key from here on as well. But thank you so much, Vikas, for joining us on the show and sharing your views. So that's Vikas Khemani talking about financial freedom, what could lead to financial freedom, and everything in terms of why he's built this Amritkaal Fund as well, and what is the story behind the kind of companies he is betting big on.